So many things happened this week. We had central banks all over the world putting in their 2 cents on what their plans for their monetary policy is. And I'm not just talking about the US with the Federal Reserve, which was a highlight event. We also saw the Swiss National Bank cut interest rates. We saw the Bank of England see some volatility here, which is, by the way, causing the pound to go flying off of a cliff, basically because some of the more hawkish participants within the central bank there have kind of given up on the idea of rate hikes. And if you remember, in US history here recently, when that happened with the Fed, it was actually a really dovish thing and bullish for US equities. We're seeing a similar thing in the FTSE right now, but so much has happened this week with Jerome Powell in his press conference, as well as the Fed's dot plot, basically highlighting they still think we're going to see 3 rate cuts this year. Let's dive into that, but more importantly, let's talk about some setups going into the end of the week. The Federal Reserve held its key interest rate steady Wednesday for the 5th consecutive meeting as the central bank awaits more data to determine when to cut rates. The Fed has raised rates aggressively over the past 2 years in a bid to fight the highest inflation in decades. But while Americans continue to deal with the high interest rates and inflation, Jerome Powell said the central bank is still not ready to lower borrowing costs just yet. That being said, the dot plot yesterday still illustrated 3 rate cuts are still on the table, which the market absolutely loved. As you can see, here's the stock market, which flew up on this news. The Dow, the S&P, and the NASDAQ all saw a huge jump yesterday, and so did gold. But now we're seeing a little bit of a pullback in that. Let's talk a little bit about that and what is causing the euro to drop, the pound to drop, and the dollar to actually come roaring back here today, despite that massive drop following the announcement of still 3 rate cuts on the table. And is the dollar actually a buy here? Let's talk about that. So like I mentioned yesterday, with everything that had happened with the Fed, we saw a massive drop in the dollar index, which makes a lot of sense. If 3 rate cuts are still expected to happen this year, that is not a good story for dollar bulls. Why? Because remember, when interest rates are higher, it makes the currency and bonds in that country more attractive, especially relative to other foreign investment opportunities. So when the Fed is now talking about getting that interest rate down, that's going to make the dollar less attractive. And at the same time, borrowing costs being lower makes people more able to go borrow money, spend money. And again, it's sort of a stimulus effect, which means a lot more printing of dollars will occur. Printing of dollars makes the dollar less valuable, so on and so forth. You can see that's why it dropped. But now, why is it jumping back here this morning? For that, we can thank PMI numbers that came out. Flash manufacturing and flash services PMIs both saw some relatively bullish things for the dollar here this morning. In terms of what we were expecting, we're expecting 51.8 and 52 respectively for these 2 areas of the economy. Economy being, of course, manufacturing sector and services sector. Well, we saw some surprise in the manufacturing. Services came in line, but what's more important here is this section here. We saw revisions up in the previous report. Now, this revision here, what that's basically saying is that after, going through and parsing the data a little closer and collecting everything they needed, they revised these numbers up and these numbers came out hot. Long story short, the US economy is still showing some strength here in these latest PMI numbers, and that's strengthening the dollar. And you can probably guess where I was going to go next. Here's gold pulling back on these numbers. Remember, a strong economy is generally speaking less bullish for gold because the gold market typically does very well when economies are slowing and inflation's still sticky, or just fear is in the market. But if the economy is showing a lot of strength, if the PMI numbers are suggesting, hey, actually things are pretty good, well, that's going to make gold look less attractive relative to other things in the market, perhaps going into stocks, etc. From a technical perspective, though, gold still looks really good. You can see we had this descending little wedge formation here, and with yesterday's data coming out, or dot plot and commentary from Jerome Powell, what we see is the market got very, very excited looking at gold. And I've said it on my channel for a while now, it's all about the rate cuts for gold. Rate cuts coming into the picture and still solidly on the table is making the gold market really excited. And as a buyer of gold, I've got 2 different positions. Both of them are in profit at this point, my buy 1 and buy 2. Things are looking pretty good. However, I still have my stop loss trailed to this point, and I'll be looking to see if we can get some sort of higher low before I trail my stop loss further. For those of you who are in our signals room, I'll update any changes to this position in real time inside of our Discord channel. And just a sneak peek of what that looks like, the Discord channel allows you to see all of the trades that I am taking, entries, exits, analysis, full breakdown, screenshots, all that sort of stuff. It's not your copy and paste sort of trading signals. That's not what this is. This is a service where you can look over the shoulder of trades that I'm taking. Basically, this is my trading journal, my full breakdowns and analysis. If that would be something useful to you to help you learn and to use as insight, consider signing up down below in the description. And also, you can join our Discord for free using the link that you can find down there as well. If you prefer Telegram, we also have a free Telegram you can join, which is again in the description. And looking at the indices, you can see they are still just in la la land, just running through the highs yet again here. And I can't argue that I am still wishing I was in these trades, feeling a little bit of FOMO, but I've still got my gold trade, and I should probably just be happy that I've got that. I've been running with gold for a little bit. That's been doing just fine. But again, S&P and NASDAQ are just off to the races here. I am looking for pullbacks on these things. The NASDAQ creating as we speak an intraday all-time high. The Dow, same thing here today, just green candle after green candle, really strong, and hard to deny that this is not an impressive rally here recently. I just wish I was a part of it, but we'll see. I could probably wait for a pullback, and I think, to be honest, that the patience will be rewarded for people who are, chasing. Stock markets do not go up forever, and when they do pull back, those pullbacks can actually be violent. They can be very aggressive. So I'll try and stay patient on this one. Another trade that I've taken, which is not going well here this morning, probably going to get stopped out, is my oil trade. I went long oil here at this pullback, and if this one doesn't work out, I do have another area of interest down here around $80 a barrel. That is US oil. So I'm watching that for a possible entry here today, and I'll show you real quick on the Edge Finder. We are getting a bullish lean on USO. Same thing with US 30. That's the Dow Jones. And so we're getting a score of +6 after looking at several variables here. Let's simplify this chart a little bit. Okay, so here's a look at USO in its entirety and all of the different categories that are being factored in by the Edge Finder: the commitment of traders data, retail positioning, seasonality, whole bunch of economic data points, so on and so forth. But again, the purpose of the top setups algorithm is to look at lots of different data points, generate bullish and bearish readings, and then technical setups are where I actually enter and exit the trades. A lot of traders don't consider fundamentals, but I do want to mention they're incredibly important. Every really professional money managing trader that I've ever met and interviewed on my channel, they always talk about fundamentals, risk management, and they spend, relatively little time talking about technical entries and exits. While they still matter, technical side of trading, right? Your entries, your stop loss, your chart markups, in my opinion, should be a very relatively small component of your trading decision making, believe it or not. Most traders spend all their time on that, and most traders lose money. Most traders should probably consider what the market is telling you in terms of fundamental trends, rather than just only ever looking at technical charts. Of course, looking at fundamentals is not going to make you immune to losses. I'll probably still stop out here on oil, and it's just another trade in the portfolio, right? It's not about this trade being every single time, you call a trade, it's going to be the one. It's about the collective. It's about the overall performance. So while I probably will get stopped out here on oil, I do have an attempt ready to try again at $80 a barrel, as long as I get a similar setup that I like, and I'll go from there. So I do not take trades that are only winning all the time, and I never want to come across that way on this channel. So here's a losing trade that I'm working with right now on oil, probably will get stopped out. And again, in the meantime, also waiting for pullbacks on some of the indices to see if we can get them, but in the meantime, they just look really strong. Here's Bitcoin coming off of its lows. Take a look at the daily chart here. Nice little bounce off of this 61,500. We'll see if that one can continue. Here's an updated look at retail positioning. Of course, one thing to note about this is we use this as a contrarian indicator, meaning when retail traders are heavily long or short a particular asset, this generally leans to be more opposite or contrarian. So for example, Kiwi dollar and Australian dollar and pound dollar, retail traders are very much long these particular currency pairs. And so that would actually give us a red or contrarian sell signal. And then on the flip side, you can see some of the things that retail traders are very short on, and that's actually giving us a contrarian bullish signal. By the way, if you've been watching the FTSE, the S&P, the NASDAQ, the DAX, and the Dow, all of these markets have just been screaming higher, and yet retail traders are still on the short side of those wonderful moves. I just wish I was part of the long side, and I will wait constructively, carefully, and patiently to do so. So we'll see if we can get that pullback. By the way, if you guys would like to try out the Edge Finder, you can get access for 30 days by using the link down below in the description. There will be some details. You just fill out that application and you'll get some details sent to you. And here's another interesting chart here of the day. We've got the pound against the US dollar. Bank of England, a couple things here to mention. The Bank of England had some very hawkish participants who were still trying to argue for rate hikes, that inflation hadn't been kind of completely beaten out. But we saw them kind of abandon that in the news that we had overnight here, or it was very early morning here US time. But Bank of England basically coming out and abandoning the idea of rate hikes. When that happened in the US, that was very dovish and very market moving. Seems to be the same scenario here for the Bank of England. The pound USD dropping pretty hard on the day. And we can also see the UK stock market, we'll do UK 100 here, is also showing some signs of strength. So here is the UK 100. This is the FTSE shooting to the moon here today and breaking through resistance. It actually looks like, in my opinion, a good potential buy on a retest, but we'll see how that one plays out. Here's the 2-year yield, which dropped big time yesterday and is now bouncing back a little bit here today, probably on the PMI numbers that came out. But again, what would this be telling you? If the 2-year yield is dropping, that is telling you that the bond market participants are thinking that yields are going to drop going forward, right? So the interest rates are expected to come down. And that's why the yield market is so useful. I highly encourage you to add these things to your watch list as a trader. Speaking of yields and bonds, I actually sold puts at the beginning of this week on TLT, which is a 20-year plus treasury bond ETF. I sold puts at $92 a strike price for 50 cents, which basically was a nice little premium that I have collected. If this thing drops, I'll buy the shares basically. And if it stays above this, I'll just collect the premium there. I did 10 contracts. It came out to a roughly $500 profit if this market stays above this strike price. And if it comes down, then I'll buy the shares at 92. So don't mind that at all, and would like to actually accumulate or build a position on TLT if this thing pulls back. So it's a market I'm watching. Here's a look at the Euro USD, which is all over the place. Seems like a common theme across a lot of different currencies right now, just to see choppiness. Euro dollar not really making a decisive move either way, despite all of the volatility this week. We saw a big shoot up, now coming down on that PMI number. So really kind of a confusing landscape right now for many of the major currency pairs. Dollar yen, probably the best trending one that I can think of the majors. USD JPY coming back up to these highs. If you do get another break and retest, this could be off to the races. And earlier today during the show, I was talking to Miko, who talked about yen pairs, and him and I kind of agreed that in terms of currency world, the yen crosses seem like the ones that are moving the cleanest. I think euro yen on a pullback could be interesting, but yen crosses seem to be moving nicely. And these things change over time, right? Certain markets, they change their behavior. Sometimes they're trending well, sometimes they're choppy. But right now, trend traders, yen pairs look really interesting. By the way, I should mention, if you're looking to trade currency pairs, commodities, stocks, indices, it can be confusing to find the right broker. And down below in the description, I have a couple referred brokers. If you use these links, you'll be supporting my channel, but they all have some special sign-up perks. You can get welcome bonuses, free shares, and again, all the information for that will be down below in the description. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.